Thank you. And again, thank you, Ronnie. I love Stony Brook, SBDC. Really take advantage of all these great resources they have to offer you. It's an amazing group of people. Any questions that you have, just chat, put them in the chat, and Leslie and I are going to check in with each other. I'll be saying, Leslie, any questions? So that we can try to answer as much as possible. So let's get into it. First of all, thank you for showing up. It's early. I know that we're all zoomed out by this time, but it is a great way to continue education just by meeting virtually and connecting. So who am I? So I'm Wendi Caplan-Carroll. I am I'm a small business coach, and I am also the co-founder of a business called Square Biz, and it is my marketing firm. And my passion has always been working with brands who service small businesses and help them connect to those small businesses. And I really believe that it's all about education. So that is what I try to do with the brands that I work with. And I teach them that they must educate first before small businesses are even going to engage or trust a product. So one of my clients is Lili Banking. I've been working with them now for over a year. I'm doing education for them and really connecting them locally to small businesses. They are a really, really cool product. They're a fintech company. So they are not a bank themselves. They have a bank partner, but what they do, it's an app. And in this app, you sign up online, but in the app, it really is a one-stop shop for all of your small business needs. You have your bank in there, but you also can literally start organizing your accounting by being able to organize all your business expenses and also set aside money for taxes. So it's very simple. Oh, there's also invoicing in there as well. So you can actually invoice your clients right in the app. For all of those things, it's $4.99 a month. So you get this awesome app that's, again, your bank. They have 1% APR on checking and your savings account, et cetera. But right now, they are set up for two groups: solo business owners. So if you are registered as a solo member LLC, or if you're a 1099, if you're doing freelance stuff and you're getting 1099s. And they also will very soon be set up for your partner LLCs, which I believe probably there's a couple of you on here. But regardless, we want to share a ton of information. I was with an SBDC last week, I think in Indiana it was. I've been talking, Lili has become an SBDC ambassador. So I've been educating and working with SBDCs through the country. And the director there said, it just has stuck with me. It's really about knowledge, and that knowledge is going to give you more power to have those conversations with the experts that you need to help you with your taxes, for instance. So I am not an accountant. I am a small business owner just like you, and I am going to give you knowledge to empower you to have really intelligent, smart conversations with your accountant, as well as leverage yourself to be able to really limit your tax obligation. So I just want to kind of explain a little bit about how taxes work. And it's really simple, and you're going to have a lot of ahas, I promise. So Lili was actually founded in 2019, and they did some research, and they recognized that those of us who are working on our own are overpaying on our taxes. And we're doing so because we're not really familiar with our business deductions that we're entitled to. So we're really going to dig into that today, as well as really talk about what taxes we're responsible for, what it really all means, and again, how to optimize and basically keep more money in our pockets. Again, I am not an accountant. I'm not a CPA, but I urge you to have a good accountant. And I would bet, Ronnie, do you guys have someone on staff that advises on, that has an accounting background? Or
Yes.
Accountants, I'm sure.
Yes,
So
no, we do. First of all, our director is an accountant. And we do have an accountant on staff. Of course, they can't use their license here, but they certainly can help. But anyway, yes, we do.
Yeah. So if you need a good accountant, like it's definitely an investment you need to make in your businesses and in your lives, I believe. And if you need a resource, ask the SBDC, but also you can ask your fellow small business owners who they use and they trust, right? Trust is a big factor in the way we make decisions. So you talk to your network and see if they have some good accountants. We don't have to pay taxes on everything we make, first of all. If you make more than $12,500 a year, we do have to pay income taxes, federal income taxes, state income taxes. If you make more than $400 a year from self-employment work, we have to pay self-employment taxes. I'm going to talk to you all about that. In addition to doing marketing and sales and servicing our clients and managing any staff we might have, we also are responsible for calculating taxes and paying them. And again, even if you use a professional accountant like Jessica, it is important to understand how taxes are calculated so you can be better prepared and you can optimize. So what do we mean by optimize? What we mean is we want you to pay what you really owe and keep more money in your pocket. We are all here trying to make money. So we want to be able to optimize and be able to keep more and give less away, so to speak. So we are responsible for self-employment tax, and then again, paying our federal income tax. And yes, in New York, we know this, we have a state income tax. I present in some states where they don't have state income taxes, but we definitely have a state income tax. So we are responsible for this. So what do our business deductions really do? So our business deductions are going to reduce our net earnings and therefore our taxable income. And our taxable income, that's where it all starts, our tax calculations, that's going to reduce the amount of taxes we pay. So business deductions are going to reduce net earnings and therefore our taxable income. So it's very simple. I'm delivering this in a 101 way because I think it will make a lot of sense. We have our gross profit, which is the amount of money that we're bringing in. You know, we charge a client $500. That $500 is our gross profit. Then we have business deductions. We're going to subtract those business deductions. We're going to talk about a few in just a moment. And that's going to generate our net earnings. And our net earnings are the starting point for all of our tax calculations. So what is a business expense? So the IRS says that a business expense must be necessary and ordinary, something typical to your trade, something common and accepted in your trade. And this is the form that you've probably already filled out. It is our Schedule C, which lists the profit and loss from their company, and it has those IRS categories that we're going to fill in for business expenses. We're going to jump in to a few in just a moment, but I will say that there are itemized expenses here, but you might find something within your own business operations that you might consider a business expense. For instance, I met a hairdresser who was creating a Parisian style salon, and she wanted to take a trip to France to pick up items and do some research, etc. So she sat down with her accountant because some of it might have looked like personal travel, etc. And they were able to itemize from that trip specific items that did count as business expenses. So the lesson here I want to impart on you is make sure you talk to your accountant if you have specific expenses that you really do believe are necessary for your business and do make sense. So what are some common ones that we as small business owners are going to see and pretty much have as part of our business deductions? So there's the hardware and software. The computer that I'm using right now was purchased this year. So when I do my taxes, this purchase will be considered a business expense, the cost of this computer. Even my mouse, I had to get a new mouse. This is hardware, considered a business expense. I just recently bought some cords that I needed, some new cords to attach my projector, my monitor into my computer. That is a business expense. I know that Joe has a graphic, is a marketing, our Joe introduced himself. He has a digital marketing firm. He might have some software he's using to do some of his projects, like Adobe, if he's creating some graphics, etc. The cost of that software is a business expense. I love going to Staples. It's like a candy store to me for some reason. I literally get like chills. I love it so much. I love paper and pens, and I have a thing with that. But I do use a lot of old school. I like writing notes. I like having my notebooks. So I go to Staples a lot. I also print a lot from my printer, and I'm getting ink. So all of those things are office expenses that I'm using for my business. So everything, paper clips, Post-it notes, anything that you're using for your business as office supplies are considered business deductions. Subscriptions and dues. So for Lori, you had your tutoring service, correct? So let's imagine that Lori, I'm making this up. Let's say that there was a subscription to Tutor Professionals of America, and Lori got this monthly newsletter or magazine. The subscription to that, it is meant for her business to educate her, to give her more information, et cetera. That subscription is considered a business expense. If you belong to a chamber of commerce or a trade association and you are paying a due, that expense is a business expense. So subscriptions and dues. Then there's marketing expenses. Many years ago, as Ronnie knows, I used to work for an email service provider, Constant Contact. So it was $20 a month. I think it still is. That was a way businesses were promoting themselves. So that $20 a month that you're spending on your email service provider, that's a business expense. The Google AdWords that you might be running, your Facebook ads. If you have, I know that we have a cleaning service. If you were doing flyers and you were passing them out door to door, those flyers are considered a marketing expense. So the printing of the flyers, the design of those flyers. If you had a storefront and you had a big billboard in front of the store, that billboard would be considered a business expense. So, we have to market our businesses to have a business. Excuse me, I must turn that off. I apologize. So those marketing expenses are business expenses and business deductions. Utilities. I'm going to hold off on that until I'm going to talk about utilities and home office space together in that context. Client meetings. So if you were meeting a client and taking them out to discuss business, the food that you are sharing, the transportation, if you had to take public transportation, the cost of that public transportation. If you were driving, like I oftentimes will drive into the city to see a client. So the cost of my Easy Pass, I live in North Jersey, the cost of my Easy Pass, the mileage, which we'll get to, the parking in the parking garage, and in Manhattan these days, it's like $75 for 2 hours. All of that is considered business expenses. Training. So if this workshop hadn't been free and it was $25, the cost of this workshop can be considered a business expense. So any kind of trainings that you're doing to enhance yourself and your careers and to get more knowledge, to do more networking, et cetera, that is considered a business expense. If you were going on a business trip, and this is 100 miles or more. So if I was traveling to Stony Brook, I don't think I couldn't write off the whole trip because it's not 100 miles from where I live. But I did go to California and I had to fly there. So I saw a client in California, my flight, my hotel, my parking, my meals, all business expenses, business deductions that you want to share with your accountant. I'm going to stop there before I jump into car mileage and home office space. Are there any questions, Leslie?
Yes.
Leslie and I are going to be a team. I can feel it.
Yes. Okay. Christina says she heard 2 opposing times that taxes would need to be paid for her family daycare. One is pay taxes every 3 months, and the other is pay taxes yearly. How often will she need to pay taxes for family daycare?
We're going to get into that. We do talk about that shortly. So we'll hold that question because we do cover that.
And someone else is asking about a 1099, so you'll get into that then, correct?
Yes. So a 1099 is when you're doing freelance work, you are given a 1099 by the person so if you're a contractor, at the end of the year, you're going to get a 1099 form showing how much you worked or how much money you earned from that particular job, or, whatever you were doing for them, you will get a 1099 form. If it was $400 or more. So if you make less than $400, you don't get 1099. Okay, so let's just jump into car mileage and home office space. So let's talk about the home office deduction. This does not apply. Now, if you are, sorry, Leslie, I don't think this applies to you because Leslie isn't a paid employee who is working from home. So if you are running your business, if a part of your home is used to do work and run your business, you can deduct a percentage of that space on your rent or your mortgage. The IRS lets you deduct $5 per square foot, capped at 300 square feet. So my office space is, I have an office space in my home. It is completely dedicated to running my business. And it's about 250 square feet. So we deduct that on my taxes. Please have a conversation with your attorney, with your accountant about this. Now, last week, I did a workshop with the Manhattan Chamber of Commerce, and there were people who live in a 400 square foot apartment in Manhattan who are, they are working from their dining room tables. Like if the IRS basically says the dining room table, that's where you're eating. But in New York City, there's not a whole lot of room to eat and to do work. So if you can carve out 50 square feet and say, this is where my office is, talk to your accountant if you have a small space and you're kind of using your office and your dining room, because you do have a strong case to present that is a home office deduction. So when you think about your home office deductions, that percentage that you are deducting from your total square feet, you can also now think about your utilities. Many of us who are working from home, as running our companies from home, are using Wi-Fi, electricity. You might have a landline. So you want to take the percentage that you're using for the home office deduction, and you can take your utility bills and you can deduct the same percentage. You can take that same percentage and apply that towards that utility deduction line. So that would be Wi-Fi and electricity and your phones and all of that. Any questions? And I have my accountants with me. Are there any questions about home office? Definitely confer with your accountant. Okay, so that's home office and utilities. Let's jump into car mileage. So we are also able to take some deductions on the car mileage that we are using. It's the mileage, not the frequency. What is interesting here, and Jessica, Eliana, you may be able to even give us a little bit more insight. So there's two methods to apply for deduction: your standard rate method or your actual expense method. So your standard rate is basically taking all the miles that you use for business, and I want to talk to you about that in a second, and then calculating the mileage at a rate. And in 2022, the standard rate from January to June was 56 cents per mile. But because of gas rates going up, the IRS took that into account and they made adjustments, and they actually upped the mileage rate to 62.5 cents from July to December. So that's in place now. There's the actual expense method, which takes into account a total percentage of all of your vehicle expenses. And from what I know and have been taught, You can't switch every year and say, oh, this year I want to do standard rate. Next year, I'm going to do actual expense method. You kind of have to stick with it for a few years. I have never done anything my entire life, now that I think about it, except standard rate. I used to be a traveling that sounds so like the Music Man or something, a traveling salesperson, but I used to sell radio time years ago. And I would be driving all over New York, I come out to Long Island a lot. And in this case, the company would pay me back for mileage. So I had a notebook in my car just sitting there, and I would write it out, so I could get paid back. So, you could be old school, you can write it out on paper. There are apps that you can find. I will say the Lili app right now doesn't allow you to do mileage. I'm hoping one day you'll be able to calculate it in there. But when you think about what mileage to calculate, so when you leave your home, I'm so sorry, when you leave your home and you travel to let's say you have an office, like you work at a WeWork or you have an office somewhere, that does not count as work mileage. However, if you leave your home and go start seeing your clients and start doing your business, if you leave your home to go to Staples, to go to the post office, etc., those are your car mileage deductions you should be taking. All right. When you leave your office to come home, not car mileage deduction. So it's not leaving the office and going to your place of business is not your car mileage deduction. It starts when you go out to see your employees or to see your customers. Okay, so we're jumping out now, and now let's get into, we've calculated a ton of business deductions now. We all have a better understanding. So how does this really play into reducing and saving us money? So again, back to the top, gross profit minus business deductions will equal your net earnings. Net earnings are the starting point of all of your calculations. So two scenarios here. In these two cases, we're showing you the difference in your self-employment tax, which I'm going to jump into in just a moment. But in scenario A, with deduction, and in this example, we're all making $70,000 gross profit. In scenario A, we're deducting $10,000 with a net earnings of $65,000. And we owe, and we'll talk about this, like how we came up with that figure, but we owe in scenario A, $9,100 in self-employment. In scenario B, we realized, oh, wow, we discovered that we needed to calculate our office expenses and our car mileage and the trainings that we attended, et cetera. And we actually have more deductions. So we have $15,000 deductions, bringing the net earnings to $60,000, reducing our self-employment to $8,400. So we saved $700 in our tax bill right there. So tips to keep track, as Eliana had said, it is really important to track everything, your miles constantly, every expenditure constantly. If you're getting receipts, just a tip, you want to save those receipts, but please think about maybe scanning them. I have so many receipts, and you look at them and they fade, right? They fade after, like if you're just throwing them in your wallet, which I tend to do at times, they begin to fade and suddenly you can't even see the total. So you want to, obviously you're able to match it on your credit cards, but having those receipts is great. And if you receive anything by email, you can actually create an email folder in your email, and Google, you can say receipt folder. So they're all there. If you want to do something like that, there's ledgers that you could buy. You could do it in an Excel spreadsheet. But of course, I have to tell you that you can do it in the Lili app. So this is what's so cool about Lili. When you sign up, you get your Lili bank card. You're bringing in money, you're earning money, and as you are spending. Now, granted, I am married and I have never been on a dating app. But from what I understand, a dating app these days, you swipe right if you like somebody, you swipe left if you don't, or something like that. In the case of Lili, you swipe left if that coffee you just bought was actually a personal expense, and you swipe right if it was a business expense, so that at the end of the day, you are having all of your expenses really, really neatly tracked in a very, very organized way. And it's really great. Your accountant's going to just absolutely love you when it comes to tax time, because everything's going to be itemized and it's going to show the exact amounts within each category. So it's a really powerful part of the Lili app that I think is a game changer for small businesses. So back to understanding our obligations, we have to dive into the fun stuff now and really try to understand what these taxes really are. So we have our self-employment tax that we have to pay on dollars we earn. And then as individuals, we have to pay our federal income tax and that's state income tax. So we're really going to talk about our self-employment and our federal income tax specifically. So this will make you go bonkers. So I'm not going to get into like, why isn't it 100% of the net earnings? And I will explain very quickly what self-employment tax is and have us all understand the importance of why we need to pay self-employment taxes. When we work full-time, our full-time employer is paying 50% and we're paying 50% of our self-employment. But as a business owner, a freelancer, we are responsible for 100% of it. Our self-employment covers our Social Security and it's our contribution to our Medicare. And we're only paying up to around we're paying into Social Security up to, let's round it off to $143,000 of income that we make. So it's 52.3% on 92.35% of our net earnings. That is the figure that is used to help us determine our self-employment tax. You will find shortly that half of your self-employment tax is actually also considered a deduction. So anytime we earn more than $400, we do have to pay self-employment taxes. So let's recap again. We made $75,000, we deducted 15, we have net earnings of 60 with a self-employment tax due. And again, that was the 15.3% of the 92.3. We have self-employment due of $8,400, $8,477. So there's your self-employment tax on any income you earned as a solo business owner. So now we have to talk about income taxes. Whew. What I know, this is complicated stuff and it's everybody's worst nightmare, except maybe Jessica and Eliana. But even Albert Einstein said the most complicated thing in the world to understand is the income tax. I am going to dumb it down that you are going to have a much better understanding and you're going to have a great conversation with your accountant or with Eliana or Jessica if you have specific questions. So we don't pay income tax on every cent we make. We need to calculate our taxable income, and it is not the same as our net earnings because we actually have a few more things we can deduct. So there's two categories, above the line deductions and below the line deductions. So again, from the top, our gross income is $75,000. We have business expenses of $15,000 with a net earnings of $60,000. So now we have something, again, called above the line deductions. And these are deductions that we hear about all the time, the contributions to our retirement accounts, student loan interest, health insurance premiums, and bingo, 50% of our self-employment tax. This is where we can write that off in our above the line deductions. So in this case, we calculated a bunch of, fictionary above the line deductions, and we now have generated our adjusted gross income. So we took the net earnings, the $10,007 in above the line deductions, and that equaled an adjusted gross income of $49,262. So now we're going to do the below the line deductions. And this is, again, two ways to do it, but unlike the car mileage and the standard car expense, we do have the opportunity to choose what benefits us most in deductions. So itemized would be itemizing our charity donations, save receipts, state and local taxes up to $10,000, mortgage interest we pay, and any unreimbursed medical expenses. They can be itemized, or there's standard. And the standard is based on your filing status as an individual. So everybody has their own filing status, single, married, filing jointly, etc. And there's the IRS every year is updating that standard deduction in 2022. Let's just look at the single just to keep things simple. The standard deduction amount is $12,950. So if you find that the standard is more than your itemized, I definitely would say you would want to use your standard as your below the line deduction. However, if your itemized adds up to more, definitely use that figure. So we take the taxable income now and figure that out. So we have our adjusted gross income, we've subtracted the below the line deductions, and now we've come up with the figure that is taxable. That is $36,712. We grossed $75,000, right? So our taxable income is on the 36,700. So now we pay our federal income tax, and it's all going to the brackets. We are a progressive tax system, and what that means is we're not paying the total 36,000 at a particular tax rate. We're breaking it down by the brackets based on our filing status and based on the dollar amounts within each percentage. So in this case, our total income tax, we have a portion of it taxed at 12%, and then the remaining portion at 10%, bringing the total income tax to $4,200. Does that make sense to all? I just take in the slides because I don't want to overcomplicate it, because I know it can be a little complicated or a little confusing. So again, our taxable income came from all of the deductions that we've taken. We go to the brackets, we look at our tax rates based on the percentage of dollars within each rate and our filing status. So that is our federal income tax. Now, state taxes, and you are going to get the Lili SBDC Small Business Guide, which is going to go in and discuss your state taxes and give you some great resources there as well. But states often use that progressive system as well. New York State is about 8.82% taxes. So you'll be filing very similarly. You'll work with your accountants on your state taxes as well. So as a recap, and this is just an example from a presentation I did in Michigan. So we have a gross income of $75,000, deductions of $15K, net earnings of $60,000. We paid our self-employment tax of $8,400. Then we went to figuring out our federal and state taxes. We have the above the line deductions, our below the line deductions. Taxable income is $36,712. We paid $4,200 in federal, in this case, $1,600 in state. Our total tax bill, $14,335, about 19% of our total income. So I want to go back to business deductions for a minute. We have our two scenarios. Scenario A, with $10,000 in business deductions, our tax bill was $15,782, which was about 21% of our gross profit. Scenario B, making sure we recorded every single business deduction. We had $15,000 in business deductions. Our total tax bill was $14,000, or 19% of our gross income. So we saved over $1,400. Excuse me, or we kept $1,400 in our pocket. So that's, significant. So things to think about, even if you make $75,000 with your business, you really only have about $60,000 to spend because you need to set aside money for taxes. We always advise, Lili advises you to set aside a minimum of 20 or 25% of your income to be able to cover your tax bill. And what's really cool in the app, I'll show you a picture of that in a minute. It allows you to do it automatically. So you can set it up that as money comes in, automatically 25% is going into a tax bucket. And the cool thing about the Lili app is, everyone runs into, not everyone, but in life, there's emergencies and you need that money. You can export it and bring it right back into your regular checking account. No fees or penalties at all. It's just there for your mind. And I actually met a graphic designer who was telling me she used the Lili app and she completely forgot that money was automatically being sent and put into that tax bucket. And tax time came and she had taxes to pay and she freaked out. And then she remembered she had the money in the tax bucket and she was pretty much covered. So always remember to set aside money and plan ahead. So the $75,000 we make, we do have to set aside some money for our taxes. Now, based on an earlier question, we have to, as small business owners, we have to pay quarterly estimated taxes. When we work for a company, we are paying our taxes weekly in the form of paycheck withholdings. Sometimes you get a refund at the end of the year because you withheld too much. But as business owners, we do have to pay taxes, estimated taxes, 4 times a year. So basically, you're dividing what you estimate you will make for a year into 4. And this is where it's really important. Like, don't stress. You have wonderful accountants and Jessica and Eliana if you don't have your own, but they will work with you to set up your estimated taxes, how much I think, especially if you're just starting out. I think as you are, you become used to being a self-employed individual, this becomes second nature. In fact, I always think of my parents. They were entrepreneurs their entire life. They own their own business. My mother never paid, like she didn't have a concept of paying taxes weekly. She always was doing her quarterly estimated taxes. So it does become second, it just becomes part of how you do your business. There is something set up called Safe Harbor so that there's no penalties if you actually underestimate. So if you at least pay 90% of your taxes due for the current year, or 100% of what you paid last year, you're in that safe harbor. If you don't pay your quarterly estimated taxes, there are some penalties that you would pay when you do file your taxes. And here's just a list of when your taxes are due. So September 15th, I paid my quarterly estimated taxes from that was based on the June 1st to August 31st earnings. And my accountant set it all up for me. So I have my slips. I can go right online, pay those taxes out. On January 15th, I'll actually do my 4th payment. That will be September 1st to December 31st. And then when April 15th comes around, I am both making that first payment for the year, as well as kind of finalizing anything I might have underestimated on, and et cetera. So that is your quarterly estimated taxes. The Lili app, and not to be too salesy here, and I don't mean to be, but the Lili app, that's the beauty of it. It's really, you're spending your money and you're able to really record keep right in the app as you spend, which is pretty awesome. And again, it allows you to save taxes automatically. So when you're setting up your account, you can say, I want to make sure that 25% of any income coming in goes into my tax bucket automatically. So it's there for you. You don't even have to think about it. So you're setting your money aside. So that's a really cool advantage of this app as well. So that is my formal presentation. But yeah, like this stuff I find so interesting because I know for me, I'm just like you. I'm a small business owner, and like this stuff is overwhelming at times when you think, oh my gosh, I have to do my taxes and I have to, I have to pay the bills and I have to service my client. I mean, it's a lot. Small business owners, we have a lot to think about. And there's some things we can control and some things that we can't. And this is one of those areas, if we can stay organized, you are going to feel in more control. And I hope that this information also empowers you to have those really good conversations with your accountants. Well, guys, I thank you so much. I hope that everybody got a little bit of something. We will send you the information from today, as well as the Lili Small Business Playbook we've collaborated with SBDCs and are giving these. It's awesome, guys. It's like 40 or 50 pages. It covers everything from taxes to invoicing and billing to mindset and wellness. So, because that is important as small business owners to stay mentally strong, as strong as we can, for sure. So you will receive a bunch of stuff from us, and I'm really grateful to the Stony Brook SBDC. Leslie, thank you. Ronnie, I love you as always. And everybody stay well, and let's have a great fourth quarter.